Hey there, investors. Today we're diving into the exciting world of Apar Industries. This Indian powerhouse is a major player in electrical and specialty oils. They're like the electricians of the stock market, and trust me, their story is buzzing with potential. Apar is all about keeping the lights on and things running smoothly. From power transmission to telecommunications, their products are essential. They're the backbone of India's infrastructure growth, and that's a powerful position to be in. Think of Apar as a three-headed power giant. They've got conductors, cables, and specialty oils, each playing a crucial role in their success. We'll break down each segment in a bit, but let's just say they've got their fingers in all the right outlets. So, buckle up, because we're about to explore why Apar Industries is generating serious buzz in the investment world. Get ready to learn about their financial strength, growth potential, and why they might just be the electrifying addition your portfolio needs. Let's go. Let's break down Apar's business like a high-voltage circuit. First up, conductors. These are the heavy lifters of the electrical world, transmitting power across long distances. Apar's conductors are top-notch, used in everything from power grids to railways. Next, we've got cables. Think of these as the veins and arteries of the electrical system, carrying power to homes and businesses. Apar makes a wide range of cables, from low voltage to high voltage, catering to diverse needs. Last but not least, specialty oils. These aren't your typical cooking oils, folks. These oils are essential for transformers and other electrical equipment, acting as coolants and insulators. Apar's specialty oils are known for their quality and reliability. Each segment contributes to Apar's overall success, creating a diversified and resilient business model. They're not a one-trick pony, and that's a major plus in my book. Now, let's juice up this analysis and dive into their financials. Hold on to your hats, investors, because Apar's financials are about to spark your interest. Over the past 5 years, their revenue has been on a steady climb, reflecting India's growing demand for electricity and infrastructure. We're talking consistent growth, the kind that gets investors excited. But it's not just about top-line growth. Apar's bottom line is looking pretty electrifying too. Their PAT, or profit after tax, has been increasing, showing they're not just growing but growing profitably. That's what we like to see. And hold on, because it gets even better. Their EBITDA, which measures their operating profitability, has also been on an upward trajectory. This tells us they're running a tight ship, controlling costs and squeezing every bit of profit out of their operations. In a nutshell, Apar's financials are painting a picture of a company that's firing on all cylinders. They're growing, they're profitable, and they're efficient. But how do they stack up against the competition? Let's find out. Now let's talk margins, baby. Margins are like the profit juice that keeps a company running. And let me tell you, Apar's margins are looking pretty juicy. Their gross margins, which measure the profitability of their products, have been consistently healthy, indicating strong pricing power and efficient operations. But it's not just about gross margins. Apar's operating margins, which factor in operating expenses, have also been impressive. This tells us they're keeping a tight lid on costs while still investing in growth. That's a balancing act not all companies can pull off. And here's the kicker. Apar's net margins, the holy grail of profitability, have been trending upwards. This means they're keeping a larger chunk of their revenue as profit after all expenses are paid. Talk about a powerful financial current. In a competitive market, strong margins are crucial for long-term success, and Apar's margin performance is a testament to their efficient operations, strong brand, and ability to command premium pricing. Now that's what I call a recipe for success. Section 5. Return on investment, a key metric for success. Listen up, investors, because this is where the rubber meets the road. We're talking about return on equity, or ROE, and return on capital employed, or ROC, two key metrics that show how efficiently a company is using its resources to generate profits. Apar's ROE has been consistently high, indicating that they're generating a solid return for their shareholders. This is music to any investor's ears, as it shows their money is working hard for them. But wait, there's more. Apar's ROCE has also been impressive, demonstrating their ability to generate profitable returns from their investments. This tells us they're not just throwing money at problems. They're making smart, strategic investments that fuel their growth. High ROE and ROCE are hallmarks of well-managed, profitable companies. And Apar's performance in these areas is a clear signal that they're using their resources wisely and generating value for their investors. Now that's what I call a power play. Section 6, Benchmarking Success, Apar versus Havells and Polycab. Alright investors, let's see how Apar stacks up against its rivals in the ring. We're talking about Havells India and Polycab India, two heavyweights in the electrical equipment industry. It's time for a head-to-head comparison. When it comes to revenue growth, Apar has been holding its own, delivering steady and consistent growth over the past 5 years. They might not be growing as fast as Havells, but they're definitely no slouches. But here's where Apar really shines: profitability. Their PAT margins and ROEs have consistently outperformed both Havells and Polycab, indicating superior efficiency and return on investment. That's right, Apar's punching above its weight. While Havells and Polycab are formidable competitors, Apar's financial performance and strong market position make it a compelling investment proposition. They're like the lean, mean, profit-generating machine of the electrical equipment industry. Section 7, Growth Drivers, Fueling Apar's Future. Hold on tight because Apar's future is looking brighter than a 1,000-watt bulb. Several growth drivers are fueling their journey towards continued success. India's insatiable appetite for electricity. As the nation develops, the demand for power will surge. A massive market for Apar's conductors, cables, and specialty oils. The government's push for renewable energy. Apar is perfectly positioned to capitalize on this trend. Infrastructure development is booming. Apar's products are essential for these projects. With these growth drivers, Apar is set for electrifying growth. Get ready for a wild ride, investors. Section 8, Risk Assessment, Navigating Potential Headwinds. Now let's get real for a moment, folks. Every investment comes with risks, and Apar Industries is no exception. But hey, knowledge is power, right? So let's shed some light on the potential headwinds Apar might face. First up, the risk of rising raw material prices. Apar relies on copper, aluminum, and other commodities, and price volatility can impact their margins. It's a risk they manage carefully, but it's something to keep an eye on. Next, competition. The electrical equipment industry is crowded, with both domestic and international players vying for market share. Apar needs to stay ahead of the curve with innovation and competitive pricing to maintain its edge. And let's not forget about economic slowdowns. A sluggish economy can impact infrastructure spending and overall demand for Apar's products. It's a cyclical risk that all industrial companies face. While these risks are real, Apar has a proven track record of navigating challenges and emerging stronger. They're a well-managed company with a strong market position, and I'm confident they can weather any storm that comes their way. Section 9, the investment case, why Apar stands out. Alright investors, let's cut to the chase. Why should you consider adding Apar Industries to your portfolio? Well, let me break it down for you. First and foremost, Apar is a market leader in a growing industry. India's demand for electricity and infrastructure is only going up, and Apar is perfectly positioned to capitalize on this trend. They're like the picks and shovels during a gold rush. Second, they're financially rock solid. We're talking consistent revenue growth, strong margins, and impressive return ratios. They're generating cash flow, paying dividends, and rewarding their shareholders. What's not to love? Third, they're riding the wave of India's growth story. As India continues its economic transformation, Apar will be a key beneficiary. They're literally powering the nation's progress, and that's a powerful position to be in. And let's not forget about their commitment to sustainability. Apar is investing in renewable energy and reducing its environmental footprint. They're not just about profits, they're about making a positive impact on the world. Section 10, Investor Takeaway, Key Points to Remember. Alright, investors, let's recap the key takeaways from our electrifying journey into the world of Apar Industries. Market leader. Apar is a dominant player in India's electrical equipment industry, with a strong market position and a wide range of products. Growth story. India's growing demand for electricity and infrastructure presents a massive growth opportunity for Apar. Financial strength. Apar boasts consistent revenue growth, healthy margins, and impressive return ratios, indicating a financially sound business. Competitive edge. Apar's focus on innovation, quality, and customer satisfaction gives it a competitive edge in the market. Investment potential. Apar's strong fundamentals, growth prospects, and commitment to sustainability make it a compelling investment opportunity. Remember, investors, this is not financial advice. Always do your own research and consult with a financial advisor before making any investment decisions. Section 11. Disclaimer. Proceed with informed decisions. Hey there, investors! Just a friendly reminder that the information shared in this analysis is for educational purposes only and should not be considered investment advice. Remember, investing involves risks, and the value of your investments can go down as well as up. Before making any investment decisions, it's crucial to do your own thorough research. Consider your investment goals, risk tolerance, and consult with a qualified financial advisor. They can provide personalized guidance based on your individual circumstances. Investing in the stock market can be exciting and potentially rewarding, but it's essential to approach it with a well-informed and cautious mindset. Remember, knowledge is power, and informed investors make the best decisions.